What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. In today's video, we're going to be going over the daily and the 30-minute time frames. What I really want to point out here is just the coiling that is taking place in these specific patterns on the 30-minute time frames. And I'm going to be getting into the indices. We're going to go over some indicators. Then I'm going to wrap it all together with a conclusion. Let's go ahead and get into it. Alrighty, welcome back. We're going to start off with the S&P 500 on the daily time frame. What do we got going on? First off, let's take a look at today's price action. Somewhat of an indecision doji type candle. We've seen this before just a couple days ago, or right over here. So it doesn't hold, don't hold too much weight on it. Overall bullish context, right? We broke out of a symmetrical triangle. We broke out of an ascending triangle. You can even call this a symmetrical triangle as well. Coiled up, back tested right here on this candle. But we just drew it out like this, and not a big deal. Still having some resistance around 3,700. Take note where the upper Bollinger Band is. This makes sense. Now, if we start breaking above these levels, I would start keying in on 3,750 for a potential fade opportunity. Now, also another thing that we got to take note of is the bulls have been holding the 5 EMA consistently for quite some time. And when the bears take hold of it, it typically doesn't last for more than a day. So it's interesting price action. Clearly, you have an accelerated move driven by aftermarket sessions. Just these big gaps. Haven't seen this kind of action before in quite some time. On the 30-minute time frame, let's point out this channel. We've been monitoring it for quite some time. What makes me think that we can potentially get either a gap and go or gap ramp and camp again is one, just looking back at the price action where we gap up, we come back to back test it, like for example right here, gap up, back tested just the top, did it again right over here and kept on continuing to move higher. We have been consolidating sideways now since pretty much December. Okay, there hasn't been too much market movement since then. If we start, like I said, break above 3,700, key in on 3,750 for a potential fade opportunity. The market does look like it wants to continue, I should say, to go higher, but we got to keep, this in our back pocket. If we start seeing the market kind of roll over, where can we find support? And we're going to be looking at these gray boxes for areas of support for the price action to potentially bounce from. And then we mix that in with confluence with support levels like the lower trend line. So this kind of range right here could very well present itself for a good buy the dip opportunity. But keep in mind, while we play this kind of action and, these just forceful moves to the upside, you need to still have stop losses in place. Let's look at the Dow Jones. Dow Jones, this is where I want to kind of get into the coiling action. Okay, it's going to be the next three indices here. First off, on the daily time frame, just notice how the trend line's been very well respected at the bottom right here. So a break below that trend line will violate this trend line, which very well can send the market lower. Now, we had a down day today, not by much, not even 0.5%, basically 0.5%, down 148 points. Notice where it found support from, the 5 EMA. The 5 EMA has been a level of support here for quite some time, since basically the beginning of November. Then we started seeing aggressive moves in the aftermarket sessions, pushing the market higher and higher, breaking out of key areas of resistance. And if we couldn't test that during the cash markets, what you typically saw was huge gap ups and then moments of consolidation. So this right here, this is not structurally sound per se, but it has been progressively moving higher. Now this coiling up pattern right here, the rising wedge, is a bearish type pattern. So we're gonna have to monitor this on both sides, the upper trend line and the bottom trend line, because you can see there's multiple pivot points within this, so it has been well respected. A break above it can very well aggressively send us higher, but a break below it can aggressively send us to go fill some of these gaps below us. Now on the 30-minute time frame, you can see it a little bit better. Just the multiple pivot points within this channel. This is coiling up action. What does that mean? Well, look at the higher lows building up, and then the price actions continually to compress. Now, it is also building up higher highs, but just notice how it's kind of compressing from a big base to just a smaller point. This is what's called coiling up. So if you start seeing breaks above it, it can very well just launch us forward. But if we start seeing breaks below it, it could be the start of some of these gaps here getting filled. All right, so Russell 2000 on the daily time frame, once again, a coiling up pattern above the 5 EMA. It's disconnected from the 5 EMA, and that's typically one of the more frequently tagged EMAs, just looking back through history. Notice you can get disconnected for quite some time, these gaps, but then they typically get filled. Now look at all these gaps on the way up. So this right here, You know, I joked on Twitter, but this is not structurally sound. We had the RSI also in overbought territory. Was once a negative divergence. I don't believe this is a negative divergence anymore. I'd have to look more closely, but it looks pretty even here. So yeah, just overall, it's just overbought at this particular point in time based off the RSI readings. And then you got the stochastic down here. It could stay overbought for quite some time, but just notice that they're both overbought. You have a coiling up pattern. This is a more of a bearish type price action. And then you have all this propelled by gaps. So potentially what you might want to be looking at is areas of support for it to break down from if you're trying to buy specific dips. As of right now, if you get into any of these indices or a lot of different stocks, you're buying at these all-time high levels, price action, and typically most of the time market valuations as well. Now on the 30-minute time frame, here it is again. Once again, we have higher lows taking place. Okay, that's a bullish trend. And then you see the price action coiling up and getting tighter and tighter. Here on this time frame, you see the negative divergence on the MACD and the RSI. All right, so right now we're at 188.38, continuing to press higher and higher and higher. So we need to be very careful here. I know that on this 30-minute time frame, if we break to an all-time high tomorrow, it would have a little mini negative divergence here as well. So that'd be potentially a opportunity to get in for a hedge if you're looking to hedge long positions. Let's talk about the NASDAQ 100. NASDAQ 100, we broke out of this. This has been the stronger indice as of late. Now, we have another record close today. So 12,000, where did we close at? 12,596. We traded a high of 12,610. So very, very just amazing price action on a solid breakout of this symmetrical triangle. We once had a false breakout, then it consolidated sideways and we projected forward. Notice we're at the upper range of the Bollinger Band. Now this dashed line here could represent a rising wedge coiling up, but I just did it dashed just to show. I want you to pay attention to this lower trend line because this lower trend line has been moving higher and higher and higher, these higher lows, and it's pretty darn steep. Now, if we start breaking below that, that could be an aggressive move to the downside once this trend line, if this trend line ever in history gets violated, which I'm sure that at some point the market will need to consolidate, or if it doesn't, you typically see 50% retracements from breakout levels. So it wouldn't shock me to see a pullback to 12,200, 12,300 around that area right here. This would be one of the gaps, and you could find support at those specific levels. Okay, let's look at the 30-minute time frame. Look at this building. This is a very interesting rising wedge pattern. It's building the entire rising wedge pattern where they have the higher lows on a negative divergence on both the MACD and the RSI. This here is coiling up to make a big move. 1 to the downside, 2 to the upside. So we got to watch both these trend lines. Now, overall, if you're seeing a rising wedge and then you have a MACD negative divergence, an RSI negative divergence, you have a bearish pattern, but it's in bullish context, you know, this to me has more ideals in the bear's favor than the bull's favor. But as we've seen previously many times, that doesn't necessarily matter. What really matters is what's going to be happening overnight. And this market has been really driven by these headlines around, you know, just multiple different things going on in the news. Let's look at the indicators now. Interesting. What do we know? What do we got here? We have the peekaboo moment on the VIX. Okay, we broke out of the falling wedge, which is a bullish breakout. Now keep in mind, we got hit by the 20-period moving average quickly and got rejected back here. So maybe this is a false breakout and we continue to head lower as the market heads higher. But as this particular moment stands, this is a breakout. So maybe we might get continuation to the upside here. I've been saying around 2750 would be my best guess, or upper range of the Bollinger Band. I'm looking at that level or this lower portion to fill this gap. Now, another thing to take note is just how the RSI is kind of slowly curling itself over right here. That's kind of interesting to me. So maybe this particular moment might be curling up to start heading higher as well. We've seen that right through here. We've seen little curl ups, and then we've seen it right over here with little curl ups like that. So I just noticed that, and I just wanted to point that out. The CPC, smooth over a 10-period moving average, this is a sentiment indicator. We use it as a sell signal, a warning sign, whatever you want to say. Now, we are now just cracked below this little level right here, so I called this, potential double bottom, and we might see it reverse. Notice the level is at 0.68. I went ahead and looked through the history of the chart and said, okay, when's the last time we've been at this level and what took place? I didn't print the chart, but if you ever want to do that, you can just pull this chart up yourself and do so. But March 7th of 2005 was the last time that it pulled back to these levels, okay? And the S&P 500 was trading around 1,230. Now, what shortly happened thereafter is we saw it move up from that direction, okay? And the price action of the S&P 500 went from 1230 to 1138. So we saw the price action of the CPC right here go from these low levels, and we saw it spike back up. And that there entailed a 7.5% drop in the S&P 500. Now, let's call it, 7 to 10%. If we start seeing this curl over or spike to the upside, a 7 to 10% drop where the market currently stands would fill pretty much, maybe not all, but the majority of all those recent gaps that really projected us up further through the month of November. So interesting to see that, but we'll see, because this can still head, a lot lower too if the bullish sentiment keeps continuing. So we'll see. Now, the NI high low, we're going to be looking at some other signal charts. 98.41. That is a very, very high level. Typically, when you see big pushes up to these directions, it could signal some market, tops, and not by tops like a crash top, but an area for a pullback is what I mean. Now, here's the NIMO. This is the breadth indicator. Notice breadth came down a little bit, 33, 34. You can see these little peaks right here kind of slowly dying off. If we start seeing this head lower and even potentially get a negative breadth, we very well might see that a pullback here take place. Now, we've seen the market peak off on negative breaths before, and now we're seeing it peak off on at least some positive breaths, but it's not like this big, huge burst of breath coming into the market projecting us forward. So let's take note of that, this dying off breath, as the market kind of tries to hold its all-time highs. We'll see what happens here in the next few days. Don't ever use one signal or one indicator as, the end-all be-all. We kind of use multiple different aspects, including intermarket analysis, to really kind of get a good idea for trade plans. As far as something that can potentially still continue to go, here's the NASDAQ 100 BPNDX. We're at 6278 down here on the RSI, so it's not overbought yet. And that tells me that 75% of the stocks here on buy signals, we're at an all-time high. Maybe this still has room to run. I would really start pumping the brakes if we start going above 70 at that specific point. And then we have the summation index for the NYSE. This right here, this is the fast stochastics, max overbought. Max overbought. Sometimes when we reach these levels, you see pullbacks in the market. Now, but these levels can be held for multiple weeks on end, so you got to take note of that. But also take note, max overbought level, just an extreme high. Let's take a look at some commodities. Okay, this is where it kind of gets interesting. We're starting to see a big run up in gold. This pink box represents just the area where I was purchasing at, that I planned out for quite some time. We pulled back into that area. It was a falling wedge, and then we broke out. To me, to be quite honest, I still don't necessarily believe the breakout right now. And let me tell you why. First off, you're going to understand more when we look at the chart of the dollar. So I'm talking long term, I still think that we're good, okay? I think long term, no matter what, we're good on gold at these levels. That's how I personally feel. However, short term, we need to capture this trend line here. We need to recapture the 50 period. And then I have this light gray shaded trend line up here as well that we will need to recapture. All right, so this is a pretty big bounce point. We bounced from the 200 period moving average, give or take just a few there, and now we're starting to trade higher. There's just a lot of work to work through in order to see continuous movements to the upside. Now we're starting to see miners really take hold too, which can validate this type of price action move. So we very well might be getting to the point that we're going to see another leg higher in gold. However, the only thing holding my just feelings back a little bit right now is looking at the chart on the dollar, which we'll be getting into here shortly. Let's look at silver first. Silver also is coming into a major area of resistance right here, this upper trend line of this descending triangle pattern. Mind you, it's a descending triangle, so you have lower highs, okay? Until we reverse course on that, then I can't believe that this is going to be a full breakout. Now, we did recapture the 50 period moving average. The MACD did turn up, so these are all good signs. But I don't want to be faked out. So, let's take note. Really quick, Bitcoin. Bitcoin is kind of struggling around the $20,000 marker, but this is not necessarily a bad sign. it was a parabolic move. It's good to see consolidation take place. Actually, the longer this consolidates, the more likely we are to shoot significantly higher. Now, it's either going to, one, have to consolidate, two, just ramp up even higher, or three, you're going to see a very precipitous drop, potentially right around the $14,000 level, which was my guess, to just to take some profits, some breath in the market. Nothing goes up forever, and if it does go up forever, you typically see some very, very aggressive moves to the downside. So the more this consolidates, is not necessarily a bad thing. On the daily time frame, it built that all-time high on a negative divergence, and we've struggled to get back above 19.5 to 2,000, that kind of zone. But keep in mind, this little trend right here is very minor, but we have higher lows building up, somewhat of an ascending triangle. Maybe if we start holding above, that gives us another breath higher. But if we start violating this, I would say maybe the first area to test would be the 16.5. That would be an area that would very well, backtest the 50-period moving average. There's previous support right in this area, and you had previous consolidation. So, watch out for that. We break down, we go hit those levels, and sometimes we bounce right back in a single day. So that's all I got on Bitcoin, really. Now let's look at the dollar. I'm going to be looking at 3 different charts for the dollar. First off, this falling wedge was drawn at the same time I drew out the falling wedge for gold. And I was like, okay, well, one of these is going to break to the upside. It was gold. Why did gold break out? Well, because the dollar broke down. Why did I think the dollar was going to break down? Well, it was because it was trading right around 92. I said if we break down 92, which is a major area of support, we can head lower. And this was an aggressive move to the downside. Notice where we happened today. We saw a big spike up, but then the bears step right back up, crushing it down. So we got to get below 90.50 to see more moves to the downside. So we did see some strength today, but we've also followed it back up with weakness. The overall context of this right here is pretty bearish. You can just look at the trends in order to see that, or the moving averages. The RSI is over sold. So this could represent a potential move where we start heading up higher. Now also keep in mind, yeah, maybe we spike higher and then potentially even break down through 90.95. But if that happens, make sure that we're doing so with a lower RSI reading, because if not, then on the daily time frame, we're going to have a positive divergence, which can very well send the dollar a lot higher. And something that makes me think that the dollar can potentially go higher is on the weekly time frame, we have 2 falling wedge patterns. The last falling wedge here was built in 2017, and we broke out to the previous all-time high. It took a very long time to do that, a couple of years, but we did so at this green shaded box. And now what we're seeing is another falling wedge coming down into this green shaded box, this area of support and previous resistance. And then also, if we zoom in even closer, you can see that the price action is trading below or right next to the lower Bollinger Band. And sometimes when you get to those levels, that's when you see these moves to the upside. Bullish pattern, bullish divergences, and it's in an area of support and at the lower range of the Bollinger Band. Something tells me that, if we start seeing the dollar move higher, that's why I kind of being faked out by gold right now. And then two, the equities market could feel a lot of pressure if all of a sudden we see dollar just spike up higher. That can put a lot of pressure on the indices. Then on the monthly time frame, more bearish outlook. We had a head and shoulders pattern, broke through the neckline, did so on a kind of a bear flag here. You can see that breaking down. So if we do continue to move lower on this time frame, I would be keeping an eye on the 200 period moving average, which is right around 87.5. So you can see that bounced and found support there previously, and when we did break above it, we did continue parabolic kind of move upwards. So keep an eye out here, but then also on the weekly time frame. We've got some interesting price action overall. Let's talk about bonds really quick. I'm just looking at the 10 to 20 year Treasury bond ETF. This is the TLH. Just take note of this channel, this down channel that it's been trading within, and we found support just recently, and now we're kind of bouncing up from that level. When we take a look at the yields have been just trending up, a little bit of a downtade today, but that's also probably, if we look at the bonds, we also had right here that uptick. Obviously, the higher the yields go, lower bonds could go, the lower yields go, the higher bonds can go. So we saw the downtick in yields, we saw bonds go up, and it was at this area of support right here, which I found, to be quite interesting there. Spread is at 0.8, that's the 10 minus 2. This right here says, hey, we're pricing in future inflation, future growth, and the market is more risk on than it is potentially risk off at this particular point in time. So we got to just monitor this and watch these levels, because it's hard to say right now, are yields going to start shooting up higher? Well, I'd say keep a close eye on the 10-year as it's trading right around 1, because it's been struggling to get above that level. If we start breaking above there, we might very well see yields spike higher. All right, let's talk about the overall thoughts on the market. So overall, what's my game plan? What am I thinking? Well, first off, to go long at these specific levels in time, it's very, very difficult to do so because of looking at signal charts and just looking at the overall market in greater context from the monthly and weekly time frame. So I'm looking at individual stocks, I'm looking at individual things to potentially go long on, but I'm holding on to a short hedge just in case if I were to wake up the next day and all of a sudden the market does pull down significantly. It's the time to be very, very careful in these environments. As you can see right here, this is the NYSE Composite Index, a broad index. It's been trading very, very high, going up and up, but just notice that all these gray boxes are gap ups. So 70 to 80%, right? Gaps get filled. And in just a month's time, we're seeing more gaps than we typically ever see. I don't never seen market price action quite like this without stuff getting filled. We've seen it on upticks here from, mid-September to October, and the same over here, and over here too, but we typically get filled. That price action gets filled. So I do think that here in the near-term future, we can very well set ourselves up for a very quick correction, and then we can potentially rally on and continue to move higher and higher. But in order to move higher and higher, we're going to need to see some strong consolidation. And then also, if we don't get the consolidation, we're going to have to see some kind of sharp moves to the downside, fill some of these gaps, and then set ourselves up to move the market higher. So what am I doing? Like I said, I'm hedged short. I'm much more in a cash position. As far as long positions go, I'm lowering the amount of equity that I'll put in to equities just because, I just don't like trading these specific levels. If you are one to YOLO calls right now, you'd be doing so, with high risk of a potential pullback. So know your risks, know where we stand in the market, and best of luck out there. Today is Monday, so I will be back tomorrow, Tuesday, December 8th. Last note, I do plan on having a meeting here with Michael Gayad on Saturday of this weekend. So if you guys have any questions, reach out to me via Twitter or Instagram or in the comment section below of maybe something that you want me to ask Michael. Michael is just very well proficient in intermarket analysis. He's going to be talking a lot about a indicator that helps predict market crashes for the most part, called the lumber to gold ratio. And he's going to talk in depth as to what and how he uses that specific indicator. Like I said, he is just an amazing author, person overall. So if you have any questions for me to ask him, let me know in the comment section below. That's all I got for you on today's Stock Market Brief. See you later.